Hello and welcome to the Mining Minute, your daily roundup of news from the mining world in 10 minutes or less. I'm your host, Chris, and the voice you're hearing is powered by 11 Labs AI voice technology. In today's episode, for Wednesday, May 1st, we're looking at Thesis Gold's upgraded resource, Cornish Metals' preliminary economic assessment, and the key takeaways from the U.S. Federal Reserve's interest rate decision and Federal Reserve Chair Jerome Powell's press conference. First up, let's look at a significant update from Thesis Gold. In an article posted in the Northern Miner, Colin McClellan reported on the upgraded resource estimate for the combined Lawyers Ranch gold-silver project in British Columbia. The project's total tonnage has skyrocketed by nearly one-third compared to the 2022 estimates, specifically for the lawyer segment alone. Thesis Gold announced that the combined project now boasts 82 million measured and indicated tons with grades of 1.1 grams of gold and almost 32 grams of silver per ton. That's a hefty increase, pushing the envelope to about 2.9 million ounces of gold and 84 million ounces of silver. But that's not all. The inferred resources aren't lagging behind either, with about 590,000 ounces of gold and over 8 million ounces of silver. This substantial growth in resources by 31% has naturally sparked a positive reaction in the stock market, with Thesis Gold's shares jumping 14% following the announcement. President and CEO Ewan Webster highlighted the strategic moves ahead, mentioning the development of high-grade starter pits to potentially speed up production and reduce the payback period. This revised strategy could significantly enhance the project's economic outlook. Thesis Gold plans to release a revised preliminary economic assessment in the third quarter. Next up, let's go to the UK, where Cornish Metals has unveiled a promising preliminary economic assessment for its South Crofty tin project in England. As reported by Cecilia Jamasmi in the Northern Miner, the figures are quite compelling. A post-tax net present value of $201 million, with pre-production costs tagged at $177.2 million. Operating under a tin price assumption of $31,000 per ton, the project forecasts an appealing after-tax internal rate of return of 29.8%. What makes this especially significant is the projected lifespan and output. Over its 14-year life, South Crofty is expected to churn out just over 49,000 tons of tin metal in concentrate, with a peak output of 5,000 tons in the fourth year. This isn't just about numbers, it's a revival story. South Crofty, poised to be the cornerstone of the UK's tin mining sector, also holds the title of the last tin mine in Europe before its closure in 1998. Ken Armstrong, interim CEO of Cornish Metals, emphasized the strategic importance of this project, marking it as a critical step toward reinstating responsible tin mining in the UK. The mine's strategic significance is further underscored by tin's classification as a critical metal, essential not just to the UK, but also recognized by the EU, the US, and China. With already secured permits for mining and environmental operations extending to 2071 and new processing facilities on the cards, Cornish Metals is not just reopening a mine, it's potentially reshaping the landscape of tin production in the Western Hemisphere. The eyes of the industry will surely be on Cornish Metals as it aims to start production by 2027. And lastly, to the United States, let's look at the key takeaways following Wednesday's crucial FOMC interest rate decision. In an article from Bloomberg, the Fed has opted to keep rates stable for a sixth consecutive meeting. Chair Jerome Powell underscored a cautious approach, signaling that any adjustments to the interest rate are off the table for the near future. His message was clear. Patience is key as they monitor progress towards the Fed's 2% inflation target. Powell painted a picture of a monetary policy that's currently restrictive enough to nudge inflation back to its target, though he stopped short of predicting when rate cuts might occur, emphasizing that future decisions will hinge on incoming data. This cautious stance reflects a delicate balancing act, aiming for a soft landing without derailing employment or inflation goals. Interestingly, while maintaining a firm grip on monetary tightening, the Fed plans to ease off the accelerator on quantitative tightening starting June 1st. They'll reduce the cap on Treasury securities rolling off the balance sheet significantly, from $60 billion to $25 billion monthly. Market reactions were notably positive. The S&P 500 ticked up by 1%, and Treasury yields softened, with swap traders now betting on rate cuts possibly beginning as early as November. Gold moved up as well and is at $2,310 at the time of recording. This move by the Fed might be a harbinger of shifting strategies in monetary policy, reflecting an adaptive response to evolving economic conditions. It's a story we'll continue to watch closely, given its significant implications for investors and the broader economic landscape.
The information discussed today is not intended to be or construed as investment advice. The Mining Minute and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Consult a professional advisor before making any investment decisions.